Hello, everyone. Thank you for joining our webinar today on how resilient is the U.S. meat supply chain, lessons from COVID-19. This webinar today was organized by the Council on Food, Agricultural, and Resource Economics. The mission of CFAIR is to enhance the effectiveness of the food, agricultural, resource, and related economic sectors through a stronger national presence of the agricultural and applied economics profession in the processes of identifying the key economic issues, connecting the work of our profession to those in policymaking and leadership, and generating greater public appreciation for research, outreach, and academic programs. CFAIR would like to acknowledge the co-sponsorship of the Friedman School of Nutrition Science and Policy at Tufts University for today's event, as well as the financial support of the Agricultural and Applied Economics Association for our 2020 webinar series. More information about additional CFAIR webinar events is available at cfair.org/events. We are fortunate to have a panel of three well-informed speakers, all extension economists who focus on the meat and livestock industry, to present data and insights on what has happened in meat supply chains over the last several months. Dr. Josh Maples is an assistant professor and extension livestock economist at Mississippi State University. Dr. Kenny Burdine is an associate extension professor of livestock economics at the University of Kentucky. And our third speaker, Dr. Glen Panzer, is a professor at Kansas State University. More than any time in my recollection, the performance of meat supply chains have been in the headline of our national news media and topics of discussion, not just among the agricultural economists and industry observers, but more broadly for consumers, advocacy groups, and a broad swath of policymakers beyond those who normally pay attention to the industry. From reporters of farmers euthanizing pigs and chickens, to concerns about worker safety, to shortages of familiar products on supermarket shelves, there's no shortage of attention focused on, or opinions preferred about, how meat is supplied to consumers in the United States during the pandemic. Indeed, given the broad set of issues and concerns, it would be impossible to cover all aspects of potential interest in a short lunchtime seminar such as this. Instead, our three presenters will focus their initial comments on their areas of primary expertise, particularly regarding the recent experience of price transmission and quantity of product moving along the supply chain, but we'll entertain broader questions as time allows. First, Dr. Maples will talk about recent experiences with production. Then, Dr. Burdine will talk about the middle of the supply chain, including harvest, processing, and distribution. Finally, Dr. Panzer will talk about sales at the retail and food service level and the current state of U.S. exports. Dr. Maples?
Thank you very much. Appreciate the chance to join with you today. Get my screen share going here. All right, so I will, as introduction suggested, I'm Josh Maples. I'm at Mississippi State University, extension economist here. And I'm going to focus on the livestock producer perspective of the situation going on due to COVID. Big thanks to the organizers of this webinar, and I appreciate the chance to speak with you today. Quick overview of where I'm going to spend a few minutes this morning. COVID-19 impacts on the livestock production and flow. This is, of course, a really timely topic. We're talking about cattle, hogs, chicken. And we're really looking at market impacts on producer price declines. And so just kind of digging in on that producer perspective, and then certainly look forward to Kenny and Glen following up on the next pieces of the supply chain. So without taking too much of the story away from Dr. Burdine, who's following up with the processing sector next, we have to really start with what's happened in the middle. And so I'll just touch on cattle processed, and we'll talk about hogs and poultry here in just a minute too. This has really been the big story. This has been the national newsworthy story of big declines in the processing sector due to lots of concerns with getting animals processed. So you'll see that in near the end of April, we had a week there that was 35% lower than the same week during 2019 in terms of the number of cattle processed. So this was a big drop, and as you can imagine, has caused significant problems for cattle producers who are unable to push the animals through the supply chain. You'll notice there that we have recovered, and that recovery continues, and that will be a theme for the other sectors as well. Hogs processing, very similar story. You'll see that we had a little bit of a run up or an increase in processing ahead of the sharp declines, just like we did in cattle. But that's same week there, 35% below 2019 level. For hogs, broiler chickens, so these are the meat chickens that we typically get most of the meat we consume, the chicken meat we consume. You'll notice the worst week there was about 6% below 2019 levels. So not as big of a percentage drop from a year ago. But I should point out that if you look at the 2020 levels, which is the blue line there, so we were, around 170 million birds per week there for most of the start of 2020. And then during this worst week, it dropped down to about 150 million birds. So about a 20 million bird decline during this worst week for broilers. So big concerns in the processing sector, which is of course caused a lot of impacts to actual producers of these animals. So the key impacts to producers, and there are more, are delayed sales. So those animals that would have normally been processed during these weeks were delayed. They had to be pushed back. Larger weights because of these delays. So animals stayed in production longer and they got heavier. And then, of course, lower prices, because that middle sector there, the processing sector, is the demand piece, or really represents the demand for the live animals. So I'll touch first on the increased weight. So if we look at what's happened in dressed weight for hogs, so this has increased the last couple of weeks significantly at a time when we typically see these weights go down. So we normally are weights are seasonal across animals, and so we're normally seeing them start to go down, but we've actually increased during this time period. And this again is a factor of, it's a result of the not being able to get them processed timely, and so they've had to stay in production longer. Similar on cattle, we're typically at near our lowest point in terms of carcass weights for cattle. So this is how much the carcass weighs after it's processed. So normally, the average for 2014 to 2018, right about now, would be somewhere around 850 pounds. We're up around 900 pounds in terms of how much those carcasses are weighing. So what this is doing is really pushing the effects that are happening on the live cattle side, the live hog side, and the broiler side, is really affecting things that are happening all the way up through the supply chain. So you see these larger weights that we've talked about, the fact that there's cattle are not leaving the feedlots as timely as they normally would. This has affected the number of cattle coming into feedlots. So as more cattle have had to stay and they're getting bigger, fewer cattle have gone into feedlots to replace them. So this really starts to affect the sectors up the stream, like the cow-calf producers and the stocker producers. So the last couple of months, about 25% lower number of cattle placed into feedlots than a year ago. So if we look at total cattle in feedlots, just using cattle as an example here, we've actually got fewer cattle in feedlots right now than we did last year. And again, that is a result of the fewer number of head going into feedlots. It's kind of a similar story on broiler chicks placed. So think about this as broiler chicks placed into production. We saw a big drop during that time period when we had the big processing concerns. They just weren't placing as many new birds to replace the old ones. So a big drop in the number of broiler chicks placed. So I just add this in here to point out that the effect is not just at that end animal production stage, when they're about to be turned into meat. It really filters all the way back up the supply chain to the original producer. So market reactions, these are futures prices. And if you're not familiar with futures prices, you can think of them as an expectation of what price will be at a certain date in the future. So the red line there is hogs for June. So if we look at that price on January 30th of this year for that June hogs contract, that would be the expectation of what price in June would be on January 30th. And similar story for May for feeder cattle and gray for live cattle. So if we look at what's happened, big decreases in the expectation of what these prices would be. So on the left axis there, we've got percent change. At one point, hog prices expectation for June were 50% lower than they were on January 15th. About 30% lower for live cattle and about 20% lower for feeder cattle. So this represents those animals going into the feedlots. So sharply lower prices across all producer levels. Broilers, similar story. So if we look at the 2019 average for the last 3 quarters, so talking Quarters 2 through 4 for 2019 averaged about 84 cents a pound. The latest USDA WASDE projections are for that to be about 68 cents per pound for the next 3 quarters, or for the 3 quarters ending 2020. So reduction in broiler prices as well. I just want to close out with a couple of kind of summary slides, and then we'll pass it on to Dr. Burton and look forward to any questions. Euthanasia, of course, is a big topic in the news, and it did occur in hogs and chickens. A lot of that was driven by your local processing situation. So, you know, what was the processor nearest you? What was the issue they were having? And did you have anywhere to go with those animals? So it was really just driven by a lack of space to go, not only for the animals ready to be processed, but also for the new ones coming in behind those. Cattle, they have longer production periods, and you can easier back up cattle through the supply chain than you can hogs and chickens. So cattle in feedlots are for longer. We saw that in the graph earlier. They're getting heavier, but they are able to stay there longer. And then lower placements into feedlots. So it backs the cattle all the way up throughout, on individual farms throughout the country. The cattle that normally might have gone into feedlots now are backed up out throughout the country. So the recovery is occurring, but this is going to take time to work through these backlogs. It will not be an overnight solution. So I'll finish up with this slide. One thing to keep in mind here is producer margins were already very thin coming into this. As producers were not making a lot of money even prior to COVID. COVID-19 has negatively impacted producer prices beyond those already slim margins. So another one, impact may not be short-lived, probably won't be short-lived, due to the longer economic concerns. We're talking short-term supply shocks right now, or short-term processing shocks right now. But really, we shift gears to thinking about how the broader economic concerns moving forward can impact these sectors. There have been some short-term relief programs. Those are going to help producers, but they're not fully going to offset the financial strain. And it's also worth noting there are some longer-term policy proposals being presented as a response to currently what's happening. So I'll wrap up there, and Kenny, I will be happy to pass it off to you to take us to the next step.
Thank you, Dr. Maple. I appreciate it. So, pleasure to be with you. I definitely want to thank Seafair for the invite, and thank everybody who's taken time to log on and watch today. As Sean mentioned earlier, my name's Kenny Burton. I'm extension professor, associate professor at University of Kentucky. Focus my extension program largely on marketing, price risk management, and general profitability considerations for livestock operations. And I'm just going to jump right in and talk about the processing perspective and supply chain stuff, kind of in the middle of the system here as we talked about. I want to start by just showing you ERS meat production forecasts as they existed back in January. And I'm doing this on purpose because I think it's important that when we think about the resiliency of the system, we also have to think about just how vulnerable we might have been and what we were dealing with coming into 2020. There's been some discussion, of course, that the cow herd came into 2020 being smaller, and that's true, but it's the 2019 calf crop that becomes 2020 beef production. So we were going to see, or are going to see, an increase in beef production for 2020. Back up just a sec. So the first thing to understand is that we had a lot of livestock to work through the system in 2020, especially in the first half. So we were somewhat vulnerable, I think, in that setting. At the same time, unemployment means something different now than it did back in January, but I do think it's important to understand that we came into 2020 with fairly low unemployment. And I just make that point because I think it's important to understand that when you combine a lot of livestock out there to work through the processing system with, a fairly high participation rate, meaning not a lot of excess labor, we're probably somewhat vulnerable to a shock like this in the first place. So bottom line is this was a pretty significant shock that we had to deal with, and we were vulnerable. I want to also back up a little bit and just talk about some things that I think the sector tried to do in preparation for it. So I mentioned that beef production was going to be higher the first half of 2020 for sure. Blue line is beef production in 2020, dotted line is 2019. And I just want you to notice how we really had ramped up beef production as we got close, further and further into February and March. I think that's important because it looked to me like we were A, moving through a lot of cattle, and B, probably even trying to get ahead with the possibility that we might see some supply disruption down the road. Another way to kind of point this out, and I don't talk about cold storage a whole lot, but I want you to notice two things. First of all, notice that typically we see cold storage draw down from January into spring. And I want you to notice again in blue line 2020, we saw the opposite this year. And I think that's a key point to understand. There was some evidence we were trying to build up some buffer or some cushion ahead of time. I use the term ruffian economist math sometimes, but if I look at per capita beef consumption, for example, and I look at cold storage, that's probably something like 9 or 10 days worth of consumption. And that's an oversimplification, but it kind of puts it in perspective of where we've been. The rest of the story is straightforward. We know this, right? Beef production was about 34% below 2019 levels at kind of the bottom here. And I would point out, like what Dr. Maple said earlier, that, we were running well above that the first part of 2020. This was a significant shock, and you can't underweight. I don't think that's very significant. That's a reduction in production of a little over a third. Now, since then, things were in a great deal. So we were about 34% below at the bottom. Last week we have data on the little bounce there you see is due to the holiday, but running 8% below year ago level. So we really did ramp things up quickly. Another point I would make is that it's the case now, and it was the case back kind of at the bottom, that the reduction in production was more than plant closures. Even existing plants that were operating were doing things that were slowing production down, largely for worker safety. So, they were putting in, things like temperature checks. You've seen some videos they put in glass dividers, things like that to try and space workers out. And so the production decrease was actually bigger than just the plant closures. It was the different way of doing business at the same time. I'll walk through pork quickly as well, but similar story, expecting fairly high production levels. We were probably bumping at capacity anyway, but we did move, a lot of pork through the system the first 3 months of 2020. The cold storage story in pork is not quite as dramatic, but we did see some increase, certainly, especially in the first 3 months of the year, some build up. Similar to beef, pork production was down about 34% from 2019, kind of at the bottom here. And then the most recent data, we've been down about 6% from 2019 levels. So again, we've ratcheted things up fairly quickly, which has actually been fairly encouraging. Dr. Maples mentioned this, didn't see quite the shock or didn't see quite the big change compared to year ago levels, but the drop from where we've been in 2020 on the broiler side to where we ended up is pretty significant there towards the end of April, first part of May. And then lastly, I'll talk about background before I get into some summary discussion. Been a lot of talk about box beef price, and you want to think about that this is a wholesale price of beef. This is really what the processors, the packers actually sell beef for. And it's kind of like a weighted average value put on a carcass weight basis. But, as we saw, two things come into play. I mentioned the processing bottleneck already and the reduction in production. I think we also have to remember we did combine that with some different consumer buying behavior that I'm sure Dr. Thomas will talk about, but folks really didn't seem all that price sensitive at the retail level. So wholesale box beef price was up about 92% from where it was the first part of April. That's very significant. Now, the last 2 weeks, it's pulled down 19%. That's, of course, from a bigger base. So another way to say that is we saw a 92% increase, and we've given back about 39% of that thus far. So those prices are coming down. That'll probably continue as the supply picture gets better. Similar story on pork cutout, although not quite as extreme. Pork cutout values went up 83%, and then they've pulled back 21% from where they were in the last 2-3 weeks. So market's starting to work some for sure. Final comments from my end, and I'll hand it over to Dr. Tom's and look forward to questions as well. But I do think it's important to say that, we came into 2020 with a lot of livestock to work through the system and fairly low unemployment. And those two things probably did make us vulnerable. And the sector was dealt a pretty tough blow. It was. On the same note, I have to point to the fact that with all the things that have been put in place, we've really ratcheted processing and production up very quickly in the last few weeks, which I find very encouraging. Secondly, the market signals can be harsh at times, but they do provide, I think, the right incentives. And we see those wholesale prices run up like we did, and there's questions about how much should they've ran up, understandably so. But when you've got a processing bottleneck and consumers that are buying a lot of meat at the grocery store, you see that type of divergence. So I think it's worth noting that. The other point I want to make just very quickly, a lot of folks have pointed to, box beef or pork cutout, and they've pointed to livestock price, and they've used that term gross margin. And they've talked about how there's this divergence between wholesale price and livestock price. But, you know, using gross margin like that can be very misleading for a handful of reasons. You know, number one, it ignores cattle that may have been purchased ahead of time on contract. It also ignores wholesale beef or pork that had been, you know, sold ahead of time under contract. So that doesn't capture all the meat that is sold and all the livestock that are purchased. It also ignores the cost side. And that's what we really don't have good feel for at all. But, you know, when you've got processing plants that are built for a certain capacity and they have to operate at less than that capacity, then I think it's very fair to assume their costs go up probably pretty significantly. We also have to remember too that a lot of these plants have had to do things to really incentivize labor. So, you know, you've heard discussions about, you know, worker incentives and so forth, you know, pay changes to try and get people, you know, back in the processing plants working. And then, excuse me. Lastly, it's brought up some questions about this issue of efficiency versus vulnerability. And I think this is a key thing, just to kind of keep in the back of our mind. You know, we have a very efficient system in the sense that we have, you know, a lot of large, efficient, you know, relatively low cost of production facilities that are supplying, you know, meat here in the U.S. Now, does that make them more vulnerable to something like this? You can argue that it might, right? But, you know, there's also this question about, you know, well, you know, if we didn't have that system, most likely cost would be higher at these plants, which probably leads to a combination of possibly lower livestock prices and possibly higher feed prices. So that issue of efficiency versus vulnerability is certainly relevant and definitely interesting to think about. I'll leave with my contact info. Feel free to reach out with questions or comments anytime, and I will look forward to what Dr. Panzer has to say.
Wonderful. Thank you, Josh and Kenny, for setting the stage. For those of you that don't know me, my name is Glen Panzer. I'm a faculty member here at Kansas State University, and I have the pleasure to be the last in our series here. And I'm going to speak particularly to the end user aspect of the supply chain. So we very briefly have touched on livestock producer perspectives, kind of the middle of the chain from a processor distributor challenge. And then here at the end is, where does this meat go? And I think it's important to recognize there's really three distinct end user channels. I would submit most people didn't recognize this or appreciate this until COVID. So domestically, we have the retail channel, so grocery store activity, and we also have the food service and restaurant channel. Those two are not the same. The percentage of different beef, pork, and chicken products that goes through, though, is quite different. As a simple example, in peacetime, pre-COVID, about 2/3 of our bacon would go through restaurant channel, not through grocery store channel. So there's some challenges with pivoting that over as an example of relevance here. And the third main channel is exports. I'm going to briefly touch on each of these three and try to get us to the end here for some Q&A. So I think it's really important to appreciate that the entire U.S. meat and livestock sector has dealt with at least two really large shocks. And it's easy to forget the first one. So I'm going to drive the first one home. In the middle of March, we as a country started with the stay-at-home orders. State by state, the dates varied and so forth. But a natural consequence of that was we had more and more of our food being consumed at home via grocery store and the like channel, and less through the food service channel. This chart right here depicts that trend. This is being pulled from the Meat Demand Monitor Project. It's actually a new project here led at K-State, jointly funded by Beef and Pork Checkoff. There's a link here. You can dig into that more on your own. But I want to call your attention in the middle of March throughout the month of May to the blue bars specifically. So the lunch meal, all three meals are here, but the lunch meal, the prevalence of those meals away from home dropped notably throughout that 6-week period. Why is that relevant? I tried to hit that on my first slide, is we don't consume the same amount, the same type of meat products domestically going through grocery store and food service. And this sent a lot of shock to the meat industry channel. If I was to plot wholesale prices of the pork belly, you would see how much they've been whipsawed, and they fell a lot during March, in large part because the demand from the restaurant channel fell down. Similarly, beef loin prices were notably weaker at the end of March because demand for beef steaks that's more heavily reliant on restaurants fell. Conversely, demand for, say, round is one of the primals where we get a lot of our ground beef items from, spiked as part of the quote unquote well-noted hoarding activity. So it's important to recognize that not all meat is equal. You know, different beef products and so forth matter, not just in consumer taste and preferences, but the market channel we send them through. And the first big shock was, for all intents and purposes, we really shut down food service activity. The good news is the public wants meat. Meat demand in many ways has been strong, and lots of questions and interest has come about. Some of this is as we move towards purchasing more through the grocery channel, people started studying labels, trying to fill up their freezer. Some of that was quote unquote hoarding. So you could just call it preparing. We can talk about that in Q&A if you want. But there's a lot of attention to this. You can dive in more on this, but even Time Magazine took note. Lots of discussion about shortages and so forth developed as we transitioned from that first shock of sort of closing food service activity to the second shock occurring, which is what the bulk of our time so far has been on, where we've had the challenge in converting live animals into meat. So there's no shortage of livestock. Hopefully that was clear from the first two presentations, but we developed a temporary disruption on meat flow, and that's where the term on shortage showed up. Asking, leaving the public asking the question, where's my meat? There was concern about how much of a disruption we were going to have. I include this chart because from my perspective, a good news point is throughout this whole story, at least through the month of April, and I think it persisted longer than that actually, was we continue to have regular use and consumption of beef and pork in each meal, despite some of those challenges. Now, some of that happened because we had consumers that were smoothing the flow of availability on their own. So by the time we got to the month of May, people were seeing disruptions in the total volume and the mix of products that were available in their grocery stores, consistent with that, at the extreme 35% reduction in the amount of animals we were harvesting there at the end of April. That showed up in the month of May, but that situation's improving. What I really want to drive home on this slide is a component of that effort in March and April of consumers, again, the term used was hoarding all the time, but preparing, getting ready for some concerns on this front, was they entered the month of May actually more prepared than most people recognize. So the specific number I want you to take from this slide is only 14% of the public entered May with less meat on hand than normal. 60% was sort of the normal amount, what they normally have, and a full 26% said they actually started with more. So it's not to dismiss the challenges of that 14%, but I think context is important that we entered the month of May on the residential front, sort of pantry, refrigerator, and freezer loaded, ready for this, more than is recognized in most media discussions. Now, to connect this with the export channel, we have to appreciate lots of things were in place before COVID, and there are ways that multiple channels can benefit from economic signals. And I'm going to use the pork example here for the next 2 or 3 slides. So pre-COVID, it's important to recognize the big trends that are in place in our pork system. The 10 years leading into 2020, we increased domestic pork production by 20%. That enabled an 11% increase in total domestic consumption, which is about 4% more per person by the time you account for population growth, and over 50% increase in exports. How does that happen? It's because, quote unquote, not all pork's equal. We don't consume the same products at home that we export, and there's a lot of economic signals that are at play that triggered that net 20% production. I was spying on some of the chat and Q&A while my colleagues here were talking. Some of the questions are relevant on how did we have more meat being produced early in 2020 and so forth. It's related to this story. There were strong economic signals for the whole meat complex to be producing more meat in 2020. I'm using pork here to drive the point home, but it applies for other species as well. A lot of that was optimism on the export front that we can't lose sight of. And to drive this home a little bit more in these 2 slides, these are borrowed from USMEF, the links at the bottom, United States Meat Export Federation. And you can see percentages here, and this is the part of the animal, in this case, the primal on a given market hog, that is exported in 2019 specifically. And I'm going to call your attention to 2 different parts in particular. So the belly, you'll see there's a 6% next to that. The belly is where we get our bacon product from, and others, but largely it's bacon. We consume the bulk of the bacon that's produced here domestically. The minority share is exported. Conversely, look at ham. So on the rear end of the animal here, roughly a third of our ham products are exported. Ham is something that is both a domestic and an export product, a little bit closer to being relevant on both. Ham is obviously prevalent in breakfast and lunch in the deli circles and so forth here domestically, but it's also in high demand with particularly our Mexican consumers. I'm really trying to give you a flavor for the demand for these meat products is driven by what consumer base values them most and what market channel values them most. That's different between export and domestic. And hopefully I made the point earlier, it's different domestically between food service and retail grocery store. This is an example of the variety meats. I personally do not eat tongue, tail, snout, but they serve a role. I think it's good. They don't get wasted. It's important to recognize we sell everything but the oink is the phrase that's often used. Those products go to where they're most valuable. It's about an $8 per animal value of these products because they were exported to other countries where on balance, they're more valued than here domestically. I'm going to wrap this up. a key question from an economic impact of COVID perspective, how short versus long-term it is will meat demand weaken? Has it already been weakening, but it's been hidden by supply challenges? That's possible as well. I've got two very nasty tables here. You can dive into the links later for more details. But the punchline of these two resources is, one, economists tend to think meat demand declines when macroeconomic activity declines. So beef in particular, but really beef, pork, and poultry are all normal goods. Demand for those products increases when consumer incomes rise. The reverse is true as well. So to the extent we have a long recession or an extra deep recession will matter, because that's bearish for beef, pork, and poultry demand. And another way to reinforce that is, again, back to this meat demand monitor project, which is survey-based, and we can talk about that more if we need to in a different setting, is the segment of the public that's most concerned about their finances, those that perceive they're going to be worse 1 year from now, reveal they have weaker meat demand. That's not surprising. It's consistent with past, but I'm just telling you, recent survey data basically reinforces past literature findings, and that makes us cautious that maybe meat demand is going to weaken because of this. But to round this out, I'm going to say that's not a foregone conclusion for a couple of reasons. One is you'd have to be asleep at the wheel to not recognize the public is asked a lot more questions about food supply in general. We're talking about meat here, but really the entire food supply. I hope there's a renewed U.S. resident appreciation of our food supply system. I would assert that the meat system has been more robust in recovering from the large shock than some people would have thought. That's a debatable statement, but that's my opinion. I hope that some residents are more comfortable with at-home cooking, and maybe they've been exposed to some different products that now they will be open to. If that is the case, that would support domestic demand going forward. And there's definitely calls for a larger share of expenditures to be spent on food than in the past going forward. Narrowly on meat, that might happen. My comment there is I hope that reflects demand growth and not just supply constraints that increase the cost of production. It's a big difference on how we could get to change in consumer expenditures. I hope it reflects a demand pull from consumers rather than restricting the industry. My last comment here, because we're running behind, it's important for context throughout everything we shared with you. We're still slated in 2020 to produce more meat than in 2018. The average American is still going to consume more meat in 2020 than they did 2018. And when you do year-over-year comparisons of 2020 versus 2019, it's really only the second quarter where we're expecting a decline. And that is the quarter where we had this massive hiccup in production. So some context is important. This is my last slide, and I'll kick it back over to Sean. Thanks for joining us.
Thank you very much. So I do hope that people enjoyed our very quick march through different parts of the supply chain here. There are a lot of questions. There were several questions that came up about issues of COVID on the floor of plants in particular and worker safety. And this backs up what we've seen around food industry concerns. A survey of food industry leaders released this week found that the biggest challenges food processors have is employee fear of coronavirus. And these safety issues have attracted media attention and drawn renewed interest more broadly into worker safety in meat processing facilities. So how can we expect this to continue playing out in the coming weeks and months, both for capacity of the system as well as potential impacts on consumer confidence and feelings about the industry?
I'll take the liberty to jump in, and my colleagues are welcome to augment my response. I think it's important to recognize and remember that, to my knowledge, this sector is the only one that President Trump has made a declaration order on. So the Defense Act has been enacted. Why am I bringing that up? That has elevated the priority of this sector in getting PPE and related protections. I think there's other aspects of that declaration we could talk about if need be, but specific to the question, that gives me confidence that to the extent that protective equipment is available, this sector is going to be in high priority to get it. I've often said in other circles, next to hospitals and frontline healthcare workers, I actually think meat processing sector is second on the priority list in many ways. I think that's showing up in the fact that we've been able to recover production. So, we're 85 to 90% of the old normal, depending on the species, depending on the day now. That's substantial recovery that reflects, I think, notable increase in testing. So lots of these labor pools have now been tested. That information being shared, provision of equipment, and the voluntary decision of the labor to show up and work. It's important to remember that is a voluntary decision here in America, and it's the net of all of that that has allowed us to recover to the extent we have.
All right. Follow-up question with that is how important were those presidential orders in seeing the capacity we had? And I guess that has two parts, both what might we have seen without those orders, but then also does that suggest that there are still some existing tensions around worker safety, and how might we see, what might we expect to see if this has a broader impact on how worker safety is regulated?
So I think you can't deny the fact that the order did spur a lot of things back. I think the fact that we've moved up so quickly is a function of that. But I would also point to the fact that a lot of these, a lot of the plants have also done some things to protect workers, at the same time. And had we had a different policy approach that was more, worker protecting, might have had an impact, sure. But I think we also have to be cognizant of the fact that we also would have seen, most likely, had it been different, we would have seen a larger shock to the supply system at the same time.
Question going back to some of the discussion around euthanization of animals on farms. So one question that came up for Dr. Maples first, but anyone else might chime in. Given this euthanizing of hogs and piglets, should we expect that this will have an impact of supply of hogs for the fall?
My quick answer is no. I don't think that the euthanasia that occurred is going to have a big impact on supply concerns, later on. And a big factor of that is the point that we came into this with a lot of hogs anyway. We were already, as Dr. Burton pointed out in his presentation, we already had lots of meat supplies and expecting to be a really large production year. So a quick answer there is no. I don't think that we're going to see big, supply impacts later down the road, but I'll be happy to hear from Glenn or Kenny.
So real quickly, Sean, is pre-COVID, there was concerns that the end of 2020 process, then we had the capacity to do so. So there's always this management of the number of animals trying to get into the processing sector. Terms like packing capacity and excess capacity and so forth are part of that discussion. There's a buffer, so to speak, with the volume and number of animals we entered 2020 that is going to, I think, assure we have large volumes of pork being produced. Yes, there's going to be fewer animals processed in the fourth quarter, but to give context to Josh's question, we're still projecting more pork consumption fourth quarter 2020 than fourth quarter 2018. That's important to keep in mind.
Different question here. A lot of what we've heard today suggests there's been a lot of bending in the system, but perhaps not breaking. But that contrasts with comments from the CEO of Tyson, for example, who asserted that the food supply chain is breaking. So based on this, comments like that coming from industry leaders, is that to bring attention to the industry and get the administration to respond? Is that about kind of staking out different positions and kind of segmenting the market in terms of communicating with downstream users? And do we expect that do you have insights as to whether we might see more conversations like this coming from CEOs of big companies like Tyson?
I think it's very dangerous for anybody, myself included, to try to project what the intent or motivation of anybody making a declaration in the paper was. So I'm certainly not going to try to act like I know what was in the mind of Tyson's CEO when that occurred. What I will do to answer that a little bit indirectly is to give a word of caution on the use of certain terms. So the term shortage can very quickly be fear-mongering, so to speak. And I've tried to be careful personally not to use the term shortage without giving additional context. I really think it's important that we appreciate that the month of May had a disruption in the flow of meat to consumers. But I think the term shortage is a little misleading. And that's why I keep, I've done it here today, trying to give us context on the amount of meat that's being produced and available to U.S. consumers is still large. It's still, even after all this, expected to be larger than we had in 2018. And I'm going to pick on the term shortage, which is embedded in versions of the story about whether the system's broke or not, and encourage all of us to be careful on what terms we use and to have some context when we make assertions.
Let me add one thing too, if it's okay, quickly. So I stopped video to try and save some bandwidth, but two things I would say. I won't pretend to understand exactly what was the intention behind the quote, but I will say that if you look at how things looked 4 weeks ago, they did look different than they did today. So I think we've really seen this ratchet up very quickly. The other thing I would point out is markets have a way of handling changes in supply. And, for the most part, I think they've done that. And pricing is the mechanism to do that with. And this is somewhat anecdotal, but what I think we're seeing is shortage probably isn't the word. What we may be seeing, though, is we're seeing less variety. You may not be able to get every single thing on your groceries. You have to make some changes from one product to another, but you're not going to probably go home empty-handed. So I think there's a difference in a decrease in variety and an actual shortage.
Thank you all. There's a lot of great questions here, and we're not going to have time for all of them, but there were a few questions kind of on that resiliency and that vulnerability versus efficiency trade-off that Dr. Burton mentioned at the end of his comment. So I did want to return to that as our last question here. Do we think we are going to see longer-term changes moving forward to maybe, to the extent that there is a trade-off for attention, do we think we might see longer-term changes that might result in slightly higher production costs overall to increase the resiliency or decrease vulnerability to some of the types of disruptions we saw out of this?
I guess I'll start it as my section, but jump in, everybody, please. Do I think it's possible? Yes. But frankly, I think for that to be the case, I think there has to be the perception that this is a longer term impact. If this is a fairly shorter term impact and it's viewed as a matter of months, or if, we do have, we do have a vaccine or better control, relatively soon, then I don't think there's economic incentives to see a lot of changes. To the extent that it persists, though, I think it's definitely possible.
Sean, I will go further as a word of caution. I agree with everything Kenny just gave us. Is there have been plant facilities that have left the industry over time. So we can do an assessment of which beef and pork plants have left over time, and you can learn from that. That reflects changes in livestock supply and demand conditions, and it also reflects the quote-unquote efficiency economic aspects that are well documented. But I'm going to go further and just say we need to be cautious and not presume that there's resiliency gain by having more and smaller plants. That is possible, and I'm on the record as saying it's possible, but quite honestly, it's just treated as an assumption that there'd be a gain there. And we know we're giving up efficiency. So the economist in me right now has to say, we think there's a potential benefit and we know there's a cost. Any good economist would give us pause to pull the trigger on a policy when we have uncertainty on the benefit and we know there's a cost, unless we do a little bit more work. I encourage additional effort assessment before we take action is really what I'm trying to press on our listeners.
All right. Well, thank you all very much. A lot of excellent and provocative questions that we were not able to get to, and I apologize for that. But please do follow up either through me or the individual speakers, and I know we will be providing some additional information on the Seafair website, including links to some of the things that our speakers today have prepared in other contexts. Just as some final comments here, I thank everyone for their attendance, and I wanted to point out that we do have additional information on upcoming webinars, including several on food supply issues in and in response to this period of pandemic. On June 26th, there'll be a webinar on local food systems during COVID-19. Ben Feldman will be talking about impacts on farmers markets, Lillian Brislin on what's happening with farm to institution, and Cesar Escalante on foreign farm workers and farm sourcing replacement workers. So we hope that people will join us for that webinar as well as our other upcoming events. Thank you again to our panelists, the attendees, and all of our supporters that helped make today's event possible.